Each and every single day, millions of dollars are generated on Polymarket by various traders. For example, this particular trader has generated 804,000 in the past 24 hours. We've got 465,000 US dollars created, or rather generated, by Cozy FNF in the past 24 hours. So what I'm about to reveal to you is a simple strategy to turn $100 into 80,000 US dollars using 3 trades with the best risk to reward analysis. Watch the entire episode and you will get away with a blueprint that will change your life. What if I told you that there is a way to accurately predict on Polymarket if the price of Bitcoin is going to go up or down? It doesn't really matter whether you are trading the 15-minute, the 1 hour, the 4 hourly, or even the daily time frame. Our group contains information which is going to be relevant to you if you want to sort of, accurately trade. And when it comes to market contracts, we obviously share the best entry levels. We give you technical analysis. We use sophisticated arbitrage bots and also AI in order for us to make sure that our accuracy as far as these prediction markets are concerned are always top notch. Feel free to join us right now. The link is going to be in the description. I go by the name of Muna, that is M-U-N-A, and welcome to my YouTube channel. Consider subscribing to my YouTube channel. So the emphasis that I have for you today is a very good concept that I love to talk about, especially when it comes to risk to reward ratio. So your risk analysis should be top notch. However, you have to understand that if you are using a very small amount of money, this is obviously very subjective. It depends on which parts of the world you're living in, but I consider $100 to be a very conservative amount of money to start your trading journey with. However, if you are able to execute and make a 10x right from your $100, you can generate $1,000. And if you have the best risk to reward ratio, right? You initially started with $100 and now you have $1,000. By the way, we are going to get to the point and the strategy that is going to help you 10x your money using Polymarket. So for now, I just want you to get accustomed to the mathematics, because the math behind it and how you should position yourself in order for you to achieve these figures is very important for you to get. So boom, you've got $100. You are able to flip it by 10x, you generate $1,000. So from $1,000, your initial investment was $100. So all you have to do is subtract $100 so that in case you get the trade wrong, because remember, these trades are going to be very high risk, high reward type of plays, and you always have to make sure that you are always in the game. You always have to stay in the game. So whenever your flip is lucrative, make sure you deduct your initial investment. So you have $100, you flip it by 10, you've got $1,000. Now the next trade is going to be subtracted by $100. So for example, if you've got $1,000, the next trade is going to be $900 by 10. Let's say for example you get to flip it by 10. You are now going to be positioned at 9,000 US dollars. So basically your $100, in case for example you end up losing this $900 right over here, remember you always have the $100 to sort of recreate this same $900, so you are safe. Okay, because when it comes to such type of trades, the initial moves are going to be very risky for you. The first parts of your journey are going to be the riskiest, because you want to position yourself to do better. Okay, so now that you have generated $9,000, right, what you have to do is now subtract the $1,000. So $9,000 subtracted by $1,000, you are now going to be able to have a trading capital of 8,000 US dollars. Okay, so 8,000 US dollars multiplied by another 10, you are finally going to have 80,000 US dollars. Now that you guys have understood the concept, right? We just now have to figure out how to position ourselves, and this is where the Wyckoff schematic plays off. And this particular strategy is mostly going to be very lucrative in a ranging market, because markets are obviously made up of three types of trading environments. Okay, you've got a trending market that's obviously towards the downside, and a trending market towards the upside, and you've got a ranging market where the price is bound in a specific boundary. So when it comes to this particular trading strategy, you are going to wait for the market to be ranging, especially when it comes to the 3-day to about 1-day time frame. Okay, so this mathematics is going to be applicable in a ranging environment, especially on the 3-day time frame or the 1-day time frame. Okay, you can also do it on a 4-hourly or 8-hourly time frame, but the most lucrative one is going to be the 1-day and the 3-day time frame. So let me go back to TradingView so that you understand what I'm talking about. So this is a Bitcoin chart, right? So you've got 1-day time frame. You can clearly see, if we go to the 1-day time frame, that Bitcoin has been ranging, and right now it has been bound in this particular range right over here, which is obviously the first push towards the towards the upside. That's move number one. The second push towards the base of the downside, and the third attempt. So we've had 1, 2, 3, and 4. And best believe, until we get out of this range, we're going to have multiple types of movements like that until we decide either to push towards the upside or to break down towards the downside. So this particular framework is the basis of what happens in a ranging market. Remember, a lot of people usually lose a lot of money during ranging markets because not a lot of people know how to position themselves and how to have the best risk to reward ratio, because you have moments where the market sort of they've got weeks. So I don't really know whether you guys are able to tell, but the price is always going in a specific boundary, and it's just like wicking all over the place. So it's very difficult for you to have a stop loss because you usually get triggered out, and it's just so difficult to trade. However, what we are going to be specifically looking for, especially when it comes to a ranging market, is a Wyckoff distribution or accumulation schematic, because if you understand the Wyckoff schematic right over here, you will be able to identify these levels such as the spring and these specific reversal moments. For example, right over here is a very good level which can bring about a reversal towards the downside, and this particular downside is a very good reversal to the upside. Okay, so as you can see right over here, Bitcoin is experiencing such a schematic, and if you guys are smart enough, you even know where I'm going and you already know how to position yourself. So what you need to do now is figure out, based on the odds that you're given. For example, if you go to Bitcoin up and down, if you go to the daily and the 4-hourly, you are going to have specific odds that are going to have undervalued shares when a reversal is bound to happen. So remember, in order for you to generate this 10x, you have to go against the grain. You have to sort of premeditate an exhaustion and a reversal, because that's the only way you are going to be able to make a 10x. So a lot of you might be wondering, hey, how is it possible that you're able to get a 10x when one Polymarket share is redeemable at $1? So usually in moments like these, right, where the price is pushing towards the upside and there's like euphoria in the market and there's a bullish sentiment or a bearish sentiment, the market shares are very undervalued. So you can buy a share towards the downside, or rather towards the opposite direction, because you have done your due diligence, and due to the fact that you know that this is a Wyckoff schematic, right? And you know that, okay, anytime soon it's definitely going to be a reversal. So you can premeditate and sort of position yourself for a reversal. And this is one of the reasons why, in order for you to pull off such numbers, you have to be very good at identifying market reversals. It pushes up, this is your first trade. You turn $100 into $1,000. Boom, you get in again. This right over here would definitely flip your $1,000. Now you're using $900. You multiply by 10x, and you're able to capitalize off of this particular downtrend right over here. And by the time this reversal comes here, you are able to flip it 8,000 times about 10. Okay, even if you miss this one, because in order for you to be very sure when it comes to these types of plays, right, you have to wait for the price to hit these extreme boundaries. So right now the boundaries of Bitcoin is around 80,000, right, between 80,000 US dollars to about 95,000. So whenever the price gets as low as the lowest boundary, in this case, which is 80,000, you're gonna make a 10x. And when the price pushes up to the highest boundary in your range, you already know it's 10x time, and then you just play the game like that. So without even overcomplicating this, because there's going to be a lot of analysis paralysis and most of you are not really technical people, let me just leave it at that. So if you guys want to have detailed information about this, you can specifically request via email for me to have like a one-on-one with you, and then I'm going to basically break down this concept. However, to all the savvy people, all you have to do is look at the Wyckoff distribution and accumulation schematic. Remember this formula right over here. Remember the risk assessment that you need to have, and always remember that you cannot be greedy. You always have to keep your initial investment $100 to about $1,000. You keep $100, because in case you end up losing this trade, in case you end up losing this particular flip between 9,000 to about $900 to $9,000, you can always come back because you've got money left. You've got $100 reserved, and then if you're able to flip this $900 into $9,000, you keep $1,000, because this is the money that you generated, and in case something bad happens, you always have another shot at making $800, or rather $9,000. So always make sure you understand your risk to reward. So this right over here is the blueprint of the Polymarket strategy that can help you turn $100 into 80,000 US dollars using 3 simple steps.